Good morning, everyone. This is Joe from New York Trading Room. I took the gold long. This is the only trade I have right now.
Matching.
That's right. I think our view is that inflation will spike and will come back down during the course of next year. If your hypothesis is right and it continues, I mean, broadly, inflation, so long as it's not caused by a big reduction in economic growth, is a good thing for yields. Clearly, we're a big investor, but we're also match. So actually, high yields, broadly is a good thing. That will give us more investment opportunities as we look forward. We are still at extremely low rates compared to history. So I think we face into inflation, obviously on the wage side and some of the claims side, with confidence that actually the economic growth that is driving most of this inflation is a good thing for our business.
We've obviously been very focused on protection and health, particularly around the rise in the mortality rate as a result of COVID. As I look at your overall sales, flat, I think, for that business unit, but health up 12%. Can I ask you around the trends you're seeing there? Is the rise in premium that you're probably implementing now having any impact then on that sales line? And what has the higher mortality rate meant for you?
So mortality rate is sort of adjusted pretty quickly, back to pre-pandemic levels across the board. We write both annuity products and life insurance products, one of which, so they sort of offset and balance each other out. Broadly, our business has been pretty balanced in terms of our exposure to that. We have seen, slightly higher life insurance rates, but not so materially higher that it's prohibitive. And we've been able to support both in terms of companies buying life insurance, which is a big part of our business for their staff, and also on the individual side. And it's been slightly softer as we've seen through the lockdown. But as we've come out of that, both advisors and mortgage market activity, which is a key driver of the growth there, we anticipate continuing to provide a step up in growth into next year.
Jason, thank you very much for joining us today. Jason Windsor with us, CFO of Aviva. We'll take you back to some of the market action, that response that we had to the CPI number, the hot 6.2% that crossed. The markets are still trying to grapple with the fact that transitory inflation, transitory higher prices is the message from central banks, but still doesn't help when you get a very strong number that you're not used to seeing across the tape. And of course, raising the question of how much longer will we be weathering these higher prices, and at what stage does it trigger these entrenched reactions or entrenches higher prices for a lot of customers and businesses. So it was a rewind on the record levels that we've had, markets just reversing off some of those highs, and particularly around tech stocks concerned about the multiples that they're trading on if the environment for rates is going to be a higher one down the track. NASDAQ shedding 1.6+%. Apple, one of the big movers to the downside in the tech space, and Salesforce as well also declining. So those were some of the big names that moved the market. Let's take you across to Asia. Dollar's been supported, of course, on the back of the trade. The Australian market trades weaker. Other key markets, though, bouncing. We've seen traction really across this day for Hong Kong and Shanghai. A huge focus on another market, and that is the retail market today, where we've got Singles Day playing out, and that is often seen as a bit of a test of the health of the Chinese consumer. And at this stage, we've got green arrows moving on to the charts. The Japanese stock market elsewhere is up 0.6%. And Evergrande is one stock that is on the move. It is up close to 6%. Reportedly, it's paid the delayed interest owed on at least 2 bonds. The grace period for $148 million in coupon payments expired yesterday. Any progression that's positive on this story is positive for the broader market and its view of some stability coming in. Don't forget, for a number of weeks and months, we've been talking about fears of contagion for the property segment. Let's push on to European futures. I want to give you a reminder of where we've been tracking. Yesterday, we had the 9th positive session in 10, and it's been a very...
Okay, guys, this is the second trade for today on gold.
It's electric powered. So we do believe we are very positive from that perspective. So we're giving, despite the fact that we are sitting on a very high level already after 11%, 11.5% revenue growth, we still guide for mid-single digit growth going forward. The growth guidance for our businesses is 5 to 8% for fiscal year 2022.
Let's look at General Electrics and their plans split up into 3 different companies. Some analysts do think that might mean more competition for you, especially in these dedicated areas. So what's your assessment?
Well, I mean, I do believe, number one, we are already 2 steps ahead. So therefore, this is not really a surprise to one side. On the other side, if you talk about our Siemens businesses, industry, smart infrastructure and mobility, no change because we didn't have GE as one of our competitors in our basket anyhow. So it's more about Healthineers and Siemens Energy. And I guess for the Siemens Healthineers also not so much changes. This is how they are seeing already today, how they compete with GE. And for Siemens Energy, I think it's best to ask Christian Bruch.
Coming up on the show, it's November 11, which in China means one thing, Singles Day. And Arjun's been enjoying all the fun. He will join us live next to tell us why this year is a slightly more muted affair.
Okay, so you can see we did the first trade was 339, and the second trade was 85. I don't like the price action right here. So let's wait and see if we have anything. Now let's talk about the EuroCAD. Morgan Stanley, he took it yesterday and he's up 99 pips. So he's short 144 at 60, his target 135.00 and the stop loss 149. He already up 99 pips. Yesterday also we said one bank from Sweden, he shorted the British pound right here in this area, and he covered his position is right here in this area. He's about 133 pips. You can see this bank, he's in Sweden, has been in business for 200 years. It looks like it's a good trader because he get the top and the bottom right. So I usually follow Morgan Stanley, Citibank, Deutsche Bank, but I never follow before this guy. But from now on, I will start follow him since he's a good trader. So he went short right here and he covered with 133 pip. I guess he covered right here because he's waiting for next rally and he will re-short again. So we will keep an eye on him. This is too far, 2 trade from 2 bank. Both of them is winner. I guess this is everything for now, and if I see anything new, I will keep you update on the chat room. Have a great day, everybody. Talk to you later.